So before we get into the charts on the sterling, aka pound sterling, let's go over an article from investing.com. This is the Bank of England hikes rates to 5% in surprise move to tackle stubborn inflation. The Bank of England raised interest rates by a bigger than expected percentage point on Thursday after it said there had been significant news suggesting British inflation would take longer to fall. The BOE Monetary Policy Committee voted 7-2 to raise its main interest rate to 5% from 4.5%, the highest since '08 and the largest rate increase since February. The economy is doing better than expected, but inflation is still too high and we have got to deal with it, BOE Governor Andrew Bailey said after the decision. If we don't raise rates now, it could be worse later, he added. This is the same phenomenon that's going on around the world, especially in the U.S. However, Fed Powell recently just put a pause, but did say that he's going to probably hike rates again the next meeting, which I believe is in July. Economists polled by Reuters had expected a move to 4.75%, although financial markets earlier on Thursday had seen a nearly 50% chance of a rise to 5%, following higher than expected inflation data released on Wednesday. Joseph Little, global chief strategist at HSBC Asset Management, said Britain was in the worst position of major Western economies, hit not only by the cost of living crisis, but also a shortage of workers and fast rising wages. Today's statement has increased concerns of a much higher terminal policy rate, perhaps as high as 6%. So the term terminal policy rate means just how high will inflation get to before it peaks. All right, so other comment. The BOE retained its previous guidance on future policy, which stated that if there were to be evidence of more persistent pressures, then further tightening in monetary policy would be required. Yeah, they're just saying that, if you read between the lines, rates are going higher, just like in the U.S. Now, when you talk about the G7 countries, you can see that New Zealand is at a 5.5%, followed by the U.S. at 5.25%, and then Great Britain is at 5%. So if you're trading Forex, what you want to do is trade New Zealand USD, pound, CAD against the Japanese yen, Swiss franc. All right. In Forex, you want to trade the strongest against the weakest pair. Now let's go to the currency on the pound. And we're going to start with the monthly chart. And price did hit a low back in September of last year at 1.05, but has been in a screaming uprise ever since. Let's take off this line here as well. And according to the price on the monthly chart, we have more room to the upside. So let's mark off how high price can go. And I kind of like this area here. As we can see, it was resistance, 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 resistance. Price broke through. And if you look at the extended red candle, there's really no buyers on the monthly chart until you get into this area here. All right, let's go down to the weekly chart because there was a setup. So we had a rally in price, one doji candle and then a rally out. Price put its feet in the water and then reacted, came back to pick up any other remaining unfilled buy orders, and it's been moving higher ever since. Now, this might have been a buy the rumor, sell the news. This is the weekly candle, and this week the candle's going to close red, although they increase rates. Maybe that was expected. However, short term, you have a target at the 1.30. Right, that's where price was basing previously, and then broke down in price, and it was smooth sailing ever since. So this is a level where I anticipate at least price pausing. So where can we get in to go long, right? Because we are in an uptrend, right? High highs, high lows, higher highs, high lows, higher highs. And I like the previous week's breakout, the origin, right around 1.26. So let's see if we can find a level of interest. Okay, so if I'm looking at the daily chart, you know, this was the origin of the leg higher that took out this pivot high. However, when I look in terms of volume, there has to be a level where buyers are willing to go long if price pulls back further enough. So let's just mark off that area. I'm not in love with the price action per se, but that is an area that took out the pivot high based on high volume. Let's mark that in blue, and we're going to go down time frames just to see if we can see potentially where the origin of the move higher started. Let's go down to the 4-hour chart, as I don't really see anything. All right, so here's how I would play this. And I'm going to actually put an alert on my screen. If price is able to pull back another, say, 150 pips, I myself is going to go long. So let's see what happens. Let's see if price can pull back further enough to take the next impulse move higher. Thanks for watching. Subscribe. Please like the video.